So right now we're just kind of reviewing this whole concept of the first BR. Now keep in mind, you see a first BR here, it didn't do much. Well, that's because we already made this big long run down. You know, in one sense, the party was kind of over in terms of a BR signal, but yes, we're going to get to these other ellipses. You know, the rule of alternation, you know, little bitty pullback, nice run. Now we're looking for a much bigger pullback, and that's where we'll come to that. And we're going along. Here's another one of these first BRs in the dash. Again, I really don't want to send this thing up. Let me scrunch this down a little bit. We've got a multi-DPTL zone. That is the 200 EMA from a 15 range bar chart. It's just, that's what I call my nowhere to go rule. You know, if I initiate that trade, chances are pretty good it's going to bounce up in here. And sure enough, it pulled back immediately and went to the tick, to that 215 range. Seems to be a very powerful, and this software does allow you to project these EMAs from other time frames. So it's a nice little feature. Same problem with this BR where it's counter trend. I'd be sending the trade directly into all of these upward sloping EMAs. Don't like that. Same thing down here, these two. We just touched this multi-support. And I wanted to do something here. I looked at this earlier. This doesn't look like much. But if you expand it out, there's a lot of things going on there. There's a whole lot of time frames, and actually a couple of those that are double D alts from a 15 range. They all landed in that one spot. So just something to be aware of. You know, didn't look like too much there, but there was a whole lot going on, and it bounced. Came down. That's why I'm not really interested in these. It already bounced off at once, but I'm very interested in that BR right there. It bounced, did a retest. Suppose it ran some stops out. And here's just another prototypical BR signal right at the opening, this yellow area. Now, could you have taken these BRs? Yes, but you're going right into this resistance zone. So kind of be patient, comes back, bounces off the 200. Comes back up. Now I feel a whole lot better. And this is a good example of, you know, normally I get a little bit nervous about starting my trade in this area. Actually, my entry would be just below the 200, but this makes the difference right here. That the fact that it did bounce and react to that multi-DPTL zone, and haven't done the fib pulls, but I'll bet you that's still within the bounds of a double top right there. And it hit it there and there. So it just told me that zone is holding. So that's what made that BR signal much better. And I'm going to keep going. I've got a big yellow word stop when I come to the end, so I do the same thing on all of them. But here again is kind of a classic double bottom right at the low of the day, short-term trend, BR signal. Again, if you were a little nervous about heading right into the 200, you could wait for another one that got you a little higher. You know, either entry would have worked there. Up here, we bounced off this resistance zone, and we had the 600 EMA. So good setup there. Here we go again with a double bottom. First BR signal. Again, if you're a little nervous about that 200, you can take the second signal. We can argue here that here's our short-term trend signal, this BR signal. Yes, it's above the 200. It's kind of far away. And I don't know that I have that filter set just for demonstration purposes, but you can say, hey, for my back testing, I don't want to see these signals when I'm any more than, let's just say, 25 bars away. And that's just a number I made up. So we've got a little BR signal right there. And again, I'm going to go a little bit quickly, but you get the idea that this is the kind of the first setup with the BRs and a few SQs. And just going real quickly through this. You know, again, we're coming out of a squeeze. There's that pattern right there. Successful SQ followed by a successful BR. I figure in there's probably some kind of a 1-2-1-2 pattern at some fractal level. Okay, so let me bring in the other chart. And what I did on this one, we're using things totally differently. You'll notice gone is the far SAR cross. In other words, the short-term trend. And now present is the longer-term trend. This is the MACD cross down here. The longer-term MACD, when it passes threshold, would get a cyan line. This chart has been turned into what I would term an EMA trader. So we've got all of these signals actually saying, hey, we're going to use the 600, the 200, the 89, and somewhere, there it is, the 200 from the 15 range bar chart. And what the software will do is allow you to put an EMA envelope around these, and you can set it to however many ticks either side of the EMA you want. But going back here in some of these forms since I made my marks, as you can see right here, we got some BR signals off the 600 EMA. Same here. Okay, so most of these are marked with a cyan ellipse, and you can see here's the 89. So we got this with a ZR. So not only did we qualify as a ZR signal, but we're also filtering with the 89, saying it has to be within X number of ticks of that 89. And you can see every one of these signals, here's a BR. Basically, I use a wider envelope with a bigger sized EMA. So the 89 is going to have a slightly smaller envelope. The 600 is going to be a little bigger. The 200 from the 15 range is going to be even bigger. In fact, here's a BR signal. A little hard to see, but that's the 200 from the 15 range. And I can't help it, but there's that same DPTL zone we looked at on the other chart. It's the same one. So we came up to that. It was also the high of the day. Got a BR signal, and that worked. The one down here off the 200 worked. Now, this being an EMA trend trader, it works a whole lot better when your major EMAs have been spread out like a fan. And you can see just where those cyan markers are. Those worked out pretty well. And let's see if we can find some others. There we go. Again, we're definitely in a downtrend. And that one, I didn't get a marker on it, but that one, and notice it's a double signal. It's a BR, and it qualified down here as a ZR signal. By the way, again, with these ZR signals, you can choose to not show them in the squeeze. I left them there just so I could comment on that. Okay, there is an example of a ZR and a squeeze with all of these EMAs just getting very tight, which kind of a definition of a squeeze, didn't go very far. And you can see it's just been kind of in and out of a squeeze. The moving averages are fairly tight. These trending signals aren't doing well. Okay, now we've got a little bit better going on. This particular BR had a nice feature. It had the 89 crossing the 200. But when these moving averages get close together, you're going to see you're going to get signals going in both directions. So just best to stay with the overall larger trend. We get away from that a little bit. Now we've got a down sloping 600, so that helped that out. And moving along, now things are spread out. Everybody's in agreement. So that one worked, that one worked, that one worked, that one worked. Here's the ZR. Notice it's in the squeeze. Notice it didn't work as well as the one that was out of the squeeze. So just something to keep in mind about using a squeeze by definition is range-bound price action. So just keep that in mind in terms of, do you want to take a trending signal when your chart is telling you, by definition, that has gone temporarily range-bound. So just something to keep in mind. And we've got BR signals going off. That's in relationship to that 200, same zone. It just keeps coming back to that. Beautiful retest right there. Yes, it's in a squeeze, but as a trader, would you be looking at, hey, we just retested right to that 200. Maybe I ought to get in. And what I like to do when I'm doing a trade on a non-signal area, I'll just put my entry right on these little yellow hash lines right there. And that way, if it comes down a bar or two and retests, I don't get in. So we've got this one going up from here. We've got this BR signal right there, actually in the 600, so that's very nice. And ZR, and then finally it kind of peters out a little bit up here because it ran into this big resistance zone. And back we go. And again, notice how you can see all three of these major EMAs pretty tightly together, and notice, gosh, the trending signals aren't doing as well. No surprise there. But here they're spread out a little bit more. We've got a downsloping 600 and a BR signal right there. So this is the EMA trader. And you can see again, we touched the 89, got one right there. No BRs in the squeeze right now. There's another one at the 89. There's a BR at the 200. Let me pull this down again. And you can see there's no question about it. We're in a down-sloping, trending environment. And so these things in that environment just keep on going and keep on going. Now here we've got the ZRs that are in the squeeze. Each little individual one, that was the start of a big run. But you notice, even if you had those filtered out, you got that one right there. Okay. Now, that one was a bit of a problem. Got that one. So this is the EMA trader version of the setup. I just see if there's anything else I really wanted to point out. After a while, they're pretty much all the same. That about does it. I just want to make sure I get all three charts in here, because the real point of this is going through charts together. So on to chart number 3. And this one's going to look very different to you. However, this is going to be one of our synergy charts. If you'll notice on this one, and I got to go back a little bit, I still have my EMAs and I still have my DPTL zones, but all I'm showing on this is Jerry's exhaustion 1 indicator, and that's it. And there's some things that I've learned about this. Now, Jerry typically runs it with the 200 EMA filter, so these are unfiltered, so you're going to get a lot of dots that are nonsense dots. Notice I put a fuchsia colored ellipse around that one. And what I wanted to show you, I've got a typical 2 standard deviation Bollinger Band, red upper and green lower. And just something to be aware of, this little yellow dashed line, that is a 3 standard deviation Bollinger Band. And by the way, that 2 standard deviation generally will contain things about 95% of the time, but a 3 standard deviation band, it's a little over 99% contained. So that price action actually made it to that 3 standard deviation band. We got an X1 dot, and you can see the reaction after that. Same thing here. What I look for is non-trending price action for these, and we get a dot forming outside of the Bollinger Band. Sometimes there's an exception. In other words, this one came up, we got, dot, 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 where's it going to turn? Wait, it turned, but it made a double top. So that's why that one's circled, and that's the reason. So we've got structure to go along with the fact that, hey, yeah, we didn't make it outside the Bollinger Band. And you look here, one of the things I also look for, this is a good example, this dot didn't quite make it outside the Bollinger Band, and we've got the 200 here, then the price finally made it out there, but notice how flat that Bollinger Band is. So that's a key thing. You want the Bollinger Band going either with the direction or flat, but not significantly against it. Had a little bit of a slope going here, but we're also coming into this nice support zone. So that made that a little bit, and sure enough, it retested. So that is how these work. Ignore counter trend X1 signals in an impulse move. If you're going to use these unfiltered, you got to deal with these. This thing is coming down hard, and it's going to trigger these things all the way down. Not until this Bollinger Band kind of flattens off do we see one of these that's worth looking at. Didn't turn into a big trade, but that's the pattern I'm looking for. Again, here's a Bollinger Band that's coming down, gosh, 45 degrees or more in slope against these, and it's awfully tough to pick them out. There are times where I will look at the third dot pattern, and I'll show you that a little later, and that happens to be a third dot, and that was the one that went the farthest, but not very, very far. This comes up to the 200. The price action just spiked up. This is another thing. These little spike moves right past the Bollinger Band, in this case 200. There's our dot, there's our big SR level. Here's another one up here. Comes just slamming down here, same thing. Just those are beautiful X1 dot signals. Again, we're in a big down sloping area. I tend to just ignore those. So I'm actually looking for price action that is, see, it came up and now it's starting to chop and turn. That's what I'm looking for. Made it out to the third standard deviation there and there. Okay. Well, I think you get the idea. Yeah, this is a real easy one. That thing just shot up past 3 standard deviations and a PPTL. The market doesn't go past 3 standard deviations and stay there very long. Just like that one. My gosh. And usually, if you can get that third standard deviation, you get a pretty good reaction out of it. So now the fun stuff starts. And that is what happens when we start putting these together. Okay. And we're going to go to our global cursor, which is wonderful for back testing and horrible for live trading. Okay, now let me go back to where I made some marks here. And what I'm looking for is, do we have any synergy? And basically these little ellipses are going to give us away here. Notice on the chart that I've got activated right now, which is the chart on the right-hand side of the screen, we've got this cyan ellipse, and that was from the trend trader screen. And this is how I came up with this. I kept noticing these things would pull back to these EMAs and very often give nice little trades. And so that was a trend trading. So that's the advantage of having the other screen. And you can see those. And look, this peak that goes way up here, we got nothing on our basic setup, but on the trend trader, we got a beautiful little BR signal here for a very nice trade. Same down here. We had nothing, but we've got the BR signal. And you can see example after example. Without that little companion chart, we would be missing out on some very, very nice entries. There's another one. When I trade this, the bigger screen is where I do all of my entries. I'm going to scrunch this down just a little bit. Right here, this thing comes down, and we've got, nothing on this main trade chart. But we've got an X1 dot on that lower left chart with a fairly flat Bollinger Band right at that support zone. That's what I'm looking for. So that allowed for that trade, which that was a pretty nice trade. So here's another one right here. We've got virtually nothing to work with. We got, a single DPTL. When I look over at that little X1, I've got two X1 dots. Now here's the significant part of using that on a 5 range, and this is very key. That 5 range bar is going to close and form that dot on the 5 range chart long before this reversal bar will even form. And that's a very, very nice feature because it's a heads up. So we actually had 2 of these dots form in this area saying, hey, pay attention. Came down, then we got a standard BR signal. So way down here, same. We got 2 dots. 2 dots worth of notice before we, hey, let's consider, and we were pulling into this great support zone. So that's why I like having these other charts open. You make a little tiny ellipse on a 5 range, and this is what it looks like on the 401 chart. So we had a X1 dot going off that looked very favorable right there, and it was a double top. Now, what about these X1 dots? Well, we had just come up pretty hard here in getting X1 dots along the way. When is it going to stop? I don't know. So when I'm in a strongly impulsing market like that, seeing all these little X1 dots, not paying them too much mind. Gee, yeah, but it turned over right there. Well, I didn't know it was going to do that. So I just wait. Comes back, makes a double top, or maybe it's a 786 retracement with a dot. That worked out. You look at some of these peaks that are just seemingly out in the middle of nowhere on our trade chart. We came back right here on the right-hand side of this, through that DPTL down almost to the low of the day, and we got nothing. But on that little chart, that little 5 range, with that X1 signal going off with a fairly flat Bollinger Band, that's pretty significant. Turned into a pretty good run. Does it depend on how you manage stops and runners and this type of thing? But had a lot of potential in it. And let me bring this down a little bit. Notice on this one, and here's where I talk about synergy. We've got on the upper left chart, we've got a EMA trader BR signal right here. And on the lower left chart, we've got 1, 2 of these X1 dots going off. By the way, the first X1 dot was going off on this little candle right here, but you had no reversal bar. You had no entry. So even if you said, hey, I'm going to enter on that X1 dot, nothing happened. The bar never formed a reversal bar. That's one nice thing about that 5 range chart. You're not going to get in prematurely. So it goes up, it makes another X1 dot, which you're going to know about before the BR signal forms. So maybe you're thinking, hey, this is pretty good, but I'm going to wait a little bit. Let's see if I can get, but then all of a sudden you get warning, BR, because that BR signal on the upper left is going to give you a warning before it forms. So you got the X1 at the 200 on the lower left, you got the BR warning going off, you got a lot of things saying, hey, you might want to take this as a short trade. And we go on, and this is just an exercise in synergy. And here again is the X1. You know, would you have been maybe a little hesitant with this thing coming down? Interesting. Got no X1 dots in this whole down row. We had. So I thought that was kind of interesting. Yep. And we made a double bottom before it really took off. And by the way, if you had gotten in there with a stop below that DPTL, you would have been fine. Just depends how you manage it. You know, here we've got on the right-hand side a BR with a first BR after the short-term trend change. But then right at that peak right next to it, let me bring this over a little bit. So right here, I got all kinds of ellipses going on here. So we've got a BR signal from the trending chart. We've got a X1 dot outside the Bollinger Band, in effect, fairly flat Bollinger Band. It flattened right off right there, with the direction of the 200. So we got a lot of reasons right here to get in. And even if we hesitated and said, well, I don't know about that, we've still got the first BR signal underneath the down-sloping 200. So multiple places and reasons to get in there. I did want to make a comment right here. And that is, I did filter out the BR signals on this right-hand screen on this trending model. And that is, had I not filtered them, you'd see a BR signal right here. But just something to keep in mind when you're in a squeeze like this and it has made some movement. In other words, it came down, it went up, it came back down. But when you see this pattern of this long string of these SAR dots, and the price comes right to it. That's, by the way, that is as far as it could go without getting a down short-term, this red line going down. Had that bar that probed below the dots closed, we would have had the short-term trend indicator. So that's the extreme. Jerry's always talking about what the target is and what the extreme target is. Well, in terms of using these ATR dots like this, that's the extreme target. But I do find, particularly when you're in a squeeze, and you see that price come down to that extreme area, they typically work out well. Now, is it going to go 100 ticks? No, but typically you're going to get a first target, a second target, and depending on what your third target is out of those. But you had a pretty good clue up here when it might stop, that down-sloping 200. When I'm doing a 3-contract model on these, I'll leave 1 and 2 alone. If I've got 3 out here, typically when I've got a 200 downsloping, I'll put it 1 tick inside the 200. Or if that was a DPTL zone, I put it 1 tick inside of that. Had a little bit right there, but the 200's a little stronger. And we've got another little X1 signal right there. Again, was it a giant trade? Nope. Up here, we've got a double signal, a BR ZR3 in the upper on the trending model, and that did pretty good. Let's see, this one up here, we've got a double signal BR upper left-hand side. No X1 dot, but something I will point out. Notice on that lower left chart, we've got a direct hit on the 50 EMA. Just another little thing to take note of. The 5 range chart responds to the 50 EMA. The Renko Supreme charts tend to respond more to the 89 EMA, and I see that over and over again. So moving along, we've already looked at the standard model here. And here's one where we had nothing on our kind of standard model on the right-hand side, but we've got a ZR-BR combination right there. That worked out pretty good. Over here, it's interesting. We've got 1, 2, 3 dots going off. We came up hard I'd be more interested in the 3 dots if we had some big major resistance zone right there. But we didn't, so it didn't pass my test. Got some more dots coming up here. Again, okay, we're getting a little closer. One thing that I do when I come up to an area and I'm looking at the right-hand chart and I see something as strong as that 200 EMA from the 15 range, it's a magnet. It's just so many times I just say, no, I'm just going to wait and see if it touches that, and if it does, I'm going to put an entry in. It's just such a strong magnet, the price. It almost has to go there time after time. I've noticed that. So as we go along here, and there are times where the trading isn't so good. This is a stock index future, pre-market. But just to give you an idea on pre-market, X1 dot right there. Bring this over a little bit. And if you can see on that lower left-hand side, the price action just went right through the Bollinger Band, almost made it to the 3rd standard deviation. When the price pierces quickly through a Bollinger Band like that, that's when you're going to see these X1 dots, and it's something to look for. Same down here. The price just, and you can see here there's not a reversal bar in here. The price just came down, 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 down. Tested the low of the day. The one up here, and I'm looking at the right-hand chart, we've got an X1 dot forming right at the 200 and right at the DPTL zone on the 5 range. And we've got a trending BR signal confirmed by the 600. So that's the synergy that I'm talking about. Now you may go for an hour or two and not see a great signal on one of these 3 charts. But generally speaking, it's not going to be a whole lot of time gone by where there's a trending signal right there, another trending signal right there, and it just kind of keeps going on like that. A little trick that I've done when you go into, let me show you on this upper left-hand chart. When you go into indicators, and this is this Jackson Pro, I'm kind of being silly. They put my name on it, but they did. What I wanted to show you is when you get down here into sounds and alerts, the signal and warning. You can turn the sounds off if you don't want them. You can say, I just want the warnings. In other words, the pre-setup. You can just say, oh, I just want to know about it when it forms. To me, that's too late. I want to know about it ahead of time. So, I particularly like both signal and warning. But what I did, you've got choices here of voice, and there's 4 of them. And notice here that I've got voice 3. Well, what I did, just to not confuse myself so much, on the chart on the right-hand side, I just used a different voice. So, this one might be a male voice, and this one might be a female voice, just so I kind of know, which chart are they coming from. So that's just a little trick on that. Now, why did I use EMD and why did I use this size chart? I happen to trade EMD. I like it. Gee, does it work on crude oil? It works on any chart, any time frame. Really, the only thing you need to do differently. If I can, I'm going to make that chart big. Yeah. If you change to a different market, a different time frame. So you just fall in love with crude oil on a 9.3. You're going to have to change your thresholds and your settings on your MACDs because they're going to calculate very differently on a different market. If you go to, EMD is 10 ticks per point. If you go to the NASDAQ, it doesn't work like that. So it's going to throw the settings of your MACD off. And that's about the only thing you need to be concerned about is just this MACD setting. So just bear that in mind. one thing I will say, and I'm actually going to type this in a little bit, and what I want to put on this thing just to so you'll be able to see it is a series of chart sizes. And there's a method to this. Notice that I put up 2131, 4151. And what the chart I'm showing on the upper right-hand side and the upper left are both 4 ones. The next one I would go to would be a 6-2, because I'm very much, and this is something I learned from Rod the programmer, you want to keep at minimum a ratio. You take the smaller number and multiply it by 3. Now, if you're using a one-step, if I couldn't do a 5-2 because 2 times 3 is 6. So the next one in the series would be a 7-2. And I'll try to be consistent here. 7-2. Well, what would be the next one? Now, it would still have to stay with the 2. But now, we get to go to a 3. And then 10-3, 11-3, and now the next one. So that's the pattern. We couldn't, on an 11-3, if we used 4, well, 4 times 3 is 12. So that's where that comes in. The reason this is critical, and the reason I wanted to put this on, come back. That particular pattern has to do with how these signals get generated, particularly the ZR signals and the BR signals. Not quite as critical with the SQ signals, but both the ZR signals and the BR signals depend on getting some amount of pullback. If you put a 10-5 chart up, which is a 2-to-1, you're not going to get much pullback. You're not going to get very many signals unless that's what you're after. But for example, this 9-3 chart, there are some traders out there that like that on crude oil. Doesn't give you near the number of signals, so it depends what you're after. If you don't want a lot of signals, go to a bigger chart. But make sure you keep these ratios in mind. You want that, at least a 3-to-1. 2-to-1 it just doesn't work too good. So a 10-5. You can try it and you say, yeah, I got some signals. You just won't see very many of them. So keep that in mind. But that is the synergy, and keep in mind, Jerry is being kind enough for anybody who's willing to give this package a try and doesn't have his ATW Masters series of indicators. That's going to come with the package, so you will have this Exhaustion 1 indicator. And I've always liked it very much, been using it for quite some time, and that's how that works. Now, let me see here, and what I'm doing here is opening up this chat box so I can just try to answer any questions that may have come along the way here. And I see one from Adam. Do you execute BR signals manually or semi-auto, or it gets you in and manages the trade? Okay, Adam. I did design an auto trader with the Felton people, and they use my specs. And this auto trader, you can set it up to trade any of the signals. And let me just find an example here. Now let's just take this little BR. So yes, the auto trader would say, oh, filtered BR signal, we're going to enter. It generally gets in at one tick above the close of the bar, and you have the option of trailing that many, many different ways. You can trail it with the SR dots. You can trail it with the hash. You can trail it with, on the bar that just closed right behind it. You can trail it with, and I have to go way to the front here, you can trail it actually, like if you're trailing this, this down move right here, you can trail it on either the entry line or the close of the bar line. So in other words, if you get a full reversal bar, you'd be stopped out. So lots of ways to trail that. I will tell you, though, to be more specific to your question, I am trying to get them to actually add the strategy to this package. And so far they have not. So long story short, yes, the strategy is there. They call it the FT Global Strategy. And I will tell you, part of the problem is when they say global strategy, it takes inputs from the greater Felton software, which is about, as Rod told me, about 10 times the amount of code that is in this TWE. The TWE package is a very refined package. The Felton software, I think they're up to about 30 trade signals, and actually you can custom make them, so it's an infinite number of trade signals. But roundabout answer to your question, one of my hopes is that they will add their auto trader to this package. Hasn't happened yet. It's there. The programming is there. It's done. It's just not in this particular package. And the problem is, if you were to sign up for the larger, the full Felton trading package, it doesn't have the filters that the TWE package has. It's got a completely different set of filters that I specified the filters and talked with Jerry about a lot of these. So that's where we stand right now. And so do I hope to someday be using this as an auto trader? You betcha. But right now we're not there yet. But oh, so close. Let me see if there's, and I hope that answered your question sufficiently. And I'm just scrolling back to see if there's any others, and I'm not seeing. So if anybody has any questions on today's session, now is the time before I hand things back over to Jerry. And actually, I want to ask Jerry, did you have any questions?
Hey, Dave, looking good.